Darin, thanks for making time here for us on Market Journal. I want to start our conversation off with corn. We're in quite a narrow trading range and low volume at this point in the week as you and I are discussing the market. But as you see it, do you see it just as a summer slumber, or is it a sign of something bigger impacting the corn market?
It's an interesting question, Bryce, because given what I've seen, and it was just it's just driving along the interstate through western Iowa. It certainly looks like, and from what I'm hearing from across the Midwest and Plains, is that the corn probably, new crop corn prices should probably be going lower. But as you said, they're pretty much range bound in here. Now, I know last week we did see new contract lows, but they bounced right back. So I would expect us just to continue to grind here through the summer. And I'm not looking for volume to pick up any great deal. And then seasonally, we can start setting our sights on the usual seasonal low, which tends to occur towards the latter part of August.
One of the things you mentioned recently in your commentary had to do with the National Corn Index putting stocks to use, I think, at a little bit above 13%. How does that figure shape your view of corn prices as we head into harvest?
Again, it's larger than the previous 10-year average for the end of July, but it's not extraordinarily so. So, how this shapes what I'm looking at is, it tells us that we're going to have ample supplies to meet demand as we make our way through the rest of the summer, which is just another month and a week or whatever that might be. So we're going to have plenty of supplies as we get closer to the 2025 harvest. Then we look at what the September-December corn spread's been doing, but more importantly, what the D's March. And the D's March has been posting for most of this week new low daily closes, meaning the carry is stronger every day. So indicating that the commercial side just continues to put pressure on this market, indicating they are growing more comfortable with whatever production turns out to be.
All right, let's switch from corn over to soybeans. We saw early gains after some of the trade deals were announced out of the White House, but volume in that market still remains light. When it comes to the demand side of the picture, particularly exports of soybeans, this time of the year, is there any hope to get some of that going?
To begin with, there are no trade deals. I know the White House says there are, but there aren't. That's just part of the game of attempting to move markets. Back in the day, it was called manipulation, whatever. But there are no actual trade deals. Now, can we see exports of U.S. soybeans pick up? Probably not. Since the last week of October, first week of November, we've seen the pace projection based on actual weekly shipments come down consistently. I think it's something like 200 million bushels below where it was there in late October. So we know the U.S. is still going to be a secondary player. That's not going to change. And as we go forward, again, if we look at the Nov-Jan spread, the commercial side is just getting more bearish this market seemingly every day.
All right, well, let's get a question in here about wheat. Saw a bit of a pop in the Kansas City contracts here this week, but it kind of took some of those gains away as you and I are visiting on Wednesday. You talk about it might be more short covering than true commercial buying in the wheat complex. Does that still remain true here at the midweek?
I think so. I don't see any reason for the commercial side to all of a sudden turn into buyers. And given, funds were still holding a net short futures position for most of the week, it was not surprising to see a little bit of a bounce particularly in the hard red winter market. Fundamentally, you mentioned available stocks to use in corn. It's incredibly bearish in the hard red winter. I think something like 45.5, 45.3, something like that as we get close to the end of July. Similar situation in soft red winter and in hard red spring. So the overall U.S. supply and demand situation, the real supply and demand situation, simply isn't getting less bearish as we make our way through the months.
All right, before I go, Darin, you kind of paint not the rosiest of pictures. Anything you can leave us with, positive side of the equation when it comes to the grain complex?
Positive side on the grain complex really, again, comes back to the corn market. It should be collapsing at this point, but it's not. So, there is this sense that we're building some support in here, possibly on the commercial side. So, as we get through, the end of summer and into early fall, and we've maybe built in the worst case scenario as far as overall supply and demand, this could start to bring some buyers back to the market.